Oh, okay.
रिकॉर्ड कर देखा
ada mic bubble lagi tiagaan itu mic itu record कर दिखे करता मत नहीं
අපි ඉතින් ළඟට ගන්නවද? ළඟට සෙටප් කරගන්න දිගාන. එතනට දාන්න
ඒක එතනට දිග
ඉබුණන් පස්සේ කරයි. එතන මේ ෆෝරම් එක කරනන් පස්සේ අයින් කරනවා.
එතන මේකත් අයින් වෙනවා.
අර වීඩියෝ එකේ විතරේ සවුන්ඩ් එක ඉඳලා තියෙනවා. ඒකෙන් පස්සේ කේබල් එක දෙන්නද නැත්නම්
වීඩියෝ එක ඉවරනහම මේ කුට්ටිය වන්නේ වීඩියෝ එක වැඩන්නේ නැහැ. කමන එක ඔස්සේ
එකම එක
ප්‍රශ්නයක්
භාෂිත බලන්න. Hello. Hello. मैं मतलब मैं काम को सेटअप पे कहते हैं ना बिना सिलेंडर को देना वाले नीचे देने को हेलो 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 मचा है ना मेले මොකද මෙල්ල දුන්න මම හරි හරි කොල්ලේ හරි 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 මචං කොල්ලේ මෙල්ල
और साउंड केबल है
ओके अरे dan komos dulu haru gitu benda itu sih udah DH ఇలా ఉన్నాయి Mandi pertama bicara banyak. Get it.
Maybe the all of you guys know.
Después de agarrar a hiker lo que
No one really yeah, but the overall race of because to get the same charge, you without
can remember input yeah, that's some money. It's actually more for sentimental reasons.
because you expect
You know, this
proper. It's like an IQ, right? You want to do an IQ.
hand feed and feed thing.
ඒකත් මම මෙයාගෙන් අහලා බලුවා ඒකත් ගන්න පුළුවන් එකක්වත් නැහැ. ඔව් වටේ නේද ෆන්ක්ෂන්. ඉතින් බලන්න.
මේ අද ඔඩියෝ කරන්නේ නෙමෙයි. ඒකයි සීන් එක. වෙන පිටින් ආවම ඕන තරම් අඩු තියෙනවා. ඔව් ගහන්න. Camera mic sama ganda. एक आउटर ऑडियो सेपरेट करना है
Aduh, misalnya kami
අර කැන්සල් කරන්න මේ යන තියෙන්නේ.
Before we begin the formal proceedings of this evening's investor forum, we would want you to feast your eyes on our new brand identity. It will be in the form of a video.
Yes.
In my life, there's so much that I have to be thankful for. So many dreams that came true because of someone's dedication. Someone's commitment. It's because of that commitment that I succeeded. That I've experienced how amazing life can be. I know now that someone will always be there, committed to helping the unside love. Experience who will enrich your life and give me back our commitment, your success.
Bright new future with NDB Bank. A National Development Bank PLC takes pleasure in presenting its financial performance for the year ended 31 December 2015 and its strategy and the way forward. NDB recognizes investors as one of the prime stakeholders in its success journey. The long-standing trust, loyalty, and confidence that our valued shareholders have placed on us have been of immense strength to us. the bank takes conscious efforts to actively engage our shareholders in open dialogue and keep them well informed of the significant developments in the bank. Considering the relevance and the valid contribution made towards sound investor relations, our investor relations scope encompasses, in addition, a range of other stakeholders in addition to shareholders, such as analysts, fund managers, stockbrokers, rating agencies, and the financial press. Our efforts in maintaining sound investor relations are reflected in the recognition we have received from CFA Sri Lanka Capital Markets Awards with the Bronze Award in 2013 or for 2013 and Silver Award for 2014. We are also pleased to announce that this event is being streamed live to stakeholders. I'd like to now introduce the panel at the head table. The chairman of the bank, Mr. N.G. Wickramaratne, the chief executive of the bank, Mr. Rajendra Tyagaraja, the group chief financial officer, Mr. Faizan Osman, and the CEO of the NDB Capital Markets Cluster, Mr. Vajra Pulatilaka. And I now invite Mr. Tyagaraja to brief the forum on NDB strategy and the way forward, and the macro level insight on the financial performance of the NDB group for the last year.
Thank you, Pradeep. Good evening, ladies and gentlemen. On behalf of the board and management of the National Development Bank, it gives me great pleasure to welcome each and every one of you to this investor presentation. We yesterday, following the announcement of the full year results on Friday, had the first webinar, which was logged in by approximately 40 fund managers, research analysts, and investors, institutional investors from far apart in various countries, including Sri Lanka. And today we have the honor and privilege of having you to this important forum. It is very important as part of ongoing engagement with the various stakeholder groups, including your community. So what I'll try and do is perhaps in the next 10-15 minutes, give a broad overview on some of the important elements of the bank's journey to date, and perhaps pull and highlight 3 or 4 levers which we pulled out of our pack towards the middle of last year, given the challenge we faced last year, and then invite Faizan Osman, our group CFO, to delve a bit more detail into the numbers, and then we come back and have an interactive session with you, taking any questions and or clarifications you may have as part of the overall conversation. Thank you very much. For those who have been to our previous presentations, you will see from this particular slide that there has been no material change in the structure of the NDB group. It's still, the bank still continues to be the apex of the group, while the investment banking cluster, headed by NDB Capital Holdings, is the main holding company for the investment bank, wealth management, the securities, and the private equity units of the investment banking business. Of course, the data section is happening now under 1 year. And then on the extreme right, you have the property development company DHPL and the Bangladesh business, NDB Capital Bangladesh, which is also approximately 78% owned by NDB. We have revamped the vision, mission, and values for the bank, which was rolled out towards the end of last year, recognizing that the old tagline, the overall vision for the bank, which was to allow Sri Lanka and perhaps had outlived its relevance and value for the ongoing business model in the context of where Sri Lanka is heading today. And in consultation, after having extensive deliberations and consulting with various levels of staff across the organization, as a team we got together and came up with something which is very simple to understand, which is really to have a vision, be the driving force for a financially empowered Sri Lanka. Now, in this context, we realize that as Sri Lanka is embracing a new wave of economic renaissance, the empowerment of individuals, regardless of profession, vocation, or occupation, is focal to anchor economic growth, sustainable economic growth. And this also has relevance to the various lines of businesses we are engaged in, be retail, individual banking, SME, refinancing, investment, or corporate banking. So we simply said, let's look at the individual, regardless of whether the person is in education, in business, in entrepreneurship, in public service, in executive capacity, regardless of age. Let's look at the basic requirements to make him or her strong, which is basically affordable housing, responsible saving, education to children, insurance, basic access to banking, and let's see how we can deploy the suite of solutions which the retail bank has towards making these individuals strong. And in doing so, you then help the respective vocations or businesses people are engaged to become stronger. And then doing so, get communities together, get small businesses stronger, and get the communities to actually anchor in aggregation what we believe will strengthen the country as a whole. And in that process, the historical advantage of the bank, which has been project financing and corporate banking, played a very important role in pulling the value chain, the supply chain, by pulling the micro and the small and medium-term businesses through connectivity, not just having access to financing, but also providing access to markets, putting it across the value chain into supporting the economic renaissance of the country. And we believe this is the USP for ADB, not just being a licensed commercial bank, but to be a development-oriented, development-focused commercial bank. Nothing that is not that which we take great pride. And in this whole journey, in this new vision, we also came out with a very simple to understand tagline with 2 words, which is, our commitment is your success. It is very simple to understand, it is emotional, and it is able to be owned from the domain supporting a branch to the CEO. So again, a lot of engagement throughout the organization in coming up with this whole communication process. And again, the history, this chart shows you the history of the bank. And the only noteworthy thing which I would like to point out, in addition to Zephyr coming into operation towards the end of 2015, the bank also took in an investment of around 9.8% in Sierra Bank sometime in the first quarter of last year. It was taken as part of its trading portfolio and it is still recorded under available for sale AFS. And it continues to be recorded under AFS this point in time. But again, the bank is in motion. It is very much in growth phase, and we are always evaluating options to see how these investments can play a meaningful part in its strategic journey. In terms of macroeconomic perspective, I think 2015, if we put out some of the critical the facts, then the country has seen a slight difference in its growth pattern. Yes, it has seen GDP growing throughout the quarters, 4.5%, 5%, and perhaps seeing it ending maybe just under 6%. But what's important is to see the difference between the previous year, and in particular to see the shift away from what was construction and infrastructure led into a more balanced growth. I think this also ties in with the Prime Minister's policy statement, also recognizing that gone are the days are the relevance of infrastructure growth and the importance of a more diversified pool of contributory factors, which are also inclusive of the export-driven and FDI-driven journey in the next phase of our growth. And in terms of external trade gap, we saw an easing, gradual easing during the last year, which we believe is still the case in the last 2 months. And inflation, while the average inflation has eased out, we've seen a gradual rise in core inflation, which we believe is continuing in 2016 as well. And this, in terms of our view on domestic interest rates, at this point in time, we believe that it is gradually creeping up. Of course, a very important factor is going to be the effectiveness of the government in ring-fencing its revenue collection mechanism, which will probably be a determinant as to how the interest rates scenario farms out perhaps in the second half of this year. And that's a critical interpretation from our point of view. The overall business model of the bank is still committed to the 7 pillars, which is the 5 pillars anchored with a very strong foundation enshrined in good corporate governance, compliance, and risk management. We believe that those 3 are fundamental to the business model. We get that right before we do anything else. And a very strong and a profitable balance sheet, which provides the shelter to the 5 pillars which intends are the business model. That has not changed. It has now been there for the last 3 years, and our commitment is so consistency and sustainability. Commitment to operational excellence, developing and sustaining a very strong sales culture in the organization. I'll touch very often with these numbers. We will see what that does in terms of our retail growth this year. Higher than average fee income, which has played a very important role in the latter part of this year. Cost optimization. We don't really talk about cost cutting, but in managing the cost base. And last but not least importantly, developing, nurturing, and retaining a best-in-class talent pool to anchor the existence and growth of the bank. So I think this model, which as a team we embraced in the summer of 2013, continues to make sense to us, and we believe in embracing it going forward. The key business strengths as the bank we see of the key attributes. I think we are committed to retain and nurture the universal banking model. We believe in this model, and in this point in time, as Sri Lanka is growing and as Sri Lanka sees the need for financial inclusion, we see the universal banking model making sense to us. I think that is very important. Expansion of the retail and SME base. Again, I think this is directly relevant to our commitment to accepting and keeping close to grassroots, personal and retail deposits. Our deposit taking journey has just been under 10 years, as opposed to many of our peers who have had decades of this experience. But we recognize the importance of retail and SME deposits. And you will see in the slide subsequent because of the announcement that this year our mix of retail and SME, which is roughly 39% of the book, has seen a year-on-year growth of around 54% coming from the retail and SME. So it has seen that disproportionately high contribution of that segment, which again demonstrates our belief that this segment is critical to the future of the bank. And it also reinforces our fundamental belief that SME and the common Sri Lankan consumer are set to play a major role in Sri Lanka's next phase of economic growth. New product innovation through enhanced use of IT. Again, we believe that innovation is central to financial services, and banking is no different. I think we gave some commitments to you last year and during the year at various presentations. And at the end of the Q&A session, I'm going to invite Darshana Ratnayake and a couple of his colleagues, Darshana who heads the retail banking, to come here and perhaps spend 10 minutes giving you a snapshot of the latest edition, what we call Shape Banking, which was launched on Valentine's Day, which is the next generation of digitally enabled mobile banking. And then the aggression in pursuing, in identifying and enhancing shareholder value. So it is a constant examination and revalidation of the business model to see how we can increase shareholder value. I will touch on that before I hand over to Osman in a moment. And the GCR framework. The GCR framework we mentioned a short while ago. See, in terms of shareholder value, the numbers have been out. We've seen perhaps the press, the initial announcement by the bank. We generated just over 3.5 billion as a group. And that is approximately 14% less than what was delivered last year. And if you recall, we came to you, those who were here in the Q2 and Q3 investor presentations. At that time, this gap was as high as 30%. And we told that the bank was recognizing the pressure on margins, the pressure on volumes, that we were putting a few levers, the strategic levers, to reduce that gap. And what you today will see is that gap has almost halved from 30% in the second quarter to 14% during the full year. I would just like to focus on three of those levers and what it has done to us. Let's take you through this particular slide, which shows the evolution during the year. The first is fees to net income. It was said that yes, we do recognize in a declining NIMS environment the importance of bringing more and more fees to the table and driving the fee-based business. And see the gradual increase which was just over 20% at the beginning of the year, is to around the mid 28% at the year end, and is rising during this part. So that's a committed journey. The cost to income, again, which was just over 50%, went up to as high as around 6% during the middle of the year. And again, we said target cost is about managing through a very robust procurement process and taking more business top line on the same cost base. And we are seeing the results of that. And hopefully, we will continue to see that curve go down during 2016. And I believe our expectation for this year is to bring it to below 45%. And then CASA. Again, it's a relatively young child, 10 years in existence, and our CASA at the end of the year was around 25.3%. Where the peers are in ahead of 40. We recognize that. But it's a journey, 10 years to from 0 to 25. But the important thing is, I thought I'd share this particular the last graph to you. If you look at all the new branches, the 5 branches we have opened in January to February to date, and the 10 branches we opened last year, and also the 2014 branches. Every one of them has generated and defended a CASA in excess of 40% and as high as 70%. I think 3 of the 5 branches we opened in 2016 to date have shown CASAs in the mid-60s and 70s. So that shows the revamp and the focus on the CASA journey. And on the bottom right hand, the big circle shows the more mature branches, which are also showing that type of CASA for a different. The SME is kicking in there. And you can see the repositioning of the bank as the primary project for the business account is also yielding results there. So the real levers during the second half of the year has been see how best we can pull the bubbles in the middle, the branches which have a basically between 2 and 6 years, focusing on those and scaling the CASA in those branches. So that is the challenge that is the 2016. The relentless focus, recognizing some of the challenges we faced in 2015, and what we can bring about it in terms of addressing them to contribute into positive years. And this is what we would like in terms of your buying and understanding. As we continue the journey in 2016, talking to you on a quarterly basis on our journey. And my commitment is to zoom in on these 3 along with names and give you and demonstrate to you the positive these 4 leaders. So that is a commitment for me. So with those few opening remarks, I would like to invite Osman to delve a bit more into the numbers, and then we will perhaps open up for questions and then invite the presentation on that. Osman?
Strategy and how the bank is going ahead. We also want to say that we've got several external recognition, and one of them, Global Finance Bank, Education Bank, Saga. This was the award which was won by another competitor bank for several years. This is what the external world is talking about us. And to me personally, what is real is the CFA award. We have got silver last year, we got bronze, and summary. This template nutshell gives the performance for the full year. You see 4 quadrants. We talk about the profitability, efficiency and return, financial position and strength, perhaps the other words, balance sheet, business capacity ratios, or in other words, our ability or the agility to go further business. Okay, let me take you to the profitability. When you look at profit for an investor or an analyst, what we deliver to the shareholders. So what we delivered to the shareholders during 2015 is 3.5 billion. That was after tax, after all expenses. Prima facie, it shows a decline of 14%. Decline, it's really not a decline in terms of quantity. Volume, there is a decline. Let me explain that. Because what happened was the previous year, there was one-off income of 750 million from one trade. We were able to make money from one, basically in an environment of 2014, we saw interest rates coming down. So we were there. And the other factor was in 2015, we had a one-off expense of 173 million, an operational loss which we, I believe that's not going to be. So basically, if you set off almost a billion, you see NDB's profit has grown by about 67% during 2015. We all know that 2015 the banking industry was a rather difficult year. Let me take you to the operating income. Operating income, we saw a growth of 2.5%. But that again, the moderate growth, because we saw our net interest margins coming by about 1%. I'll explain that in detail in the other slide. But our fee and other income, CEO discussed under the strategy, we saw a growth of around 10%. But overall, we see a growth of around 2.5%. Operating expense, there's a growth of around like 16%. But if you really set off that 173 million, the real increase is around 12%. But that 12% is again can be justified to open 10 branches in 2015. Plus, we recruited about like 200 staff members. This is the of opening new branches. We already opened 5 more branches this year, and then the normal salary increase for our staff. Okay, let me go to the efficiency and return. Cost to income ratio is 51%. Well, we are not happy with 51%, as you have explained. What we are looking at in short run is definitely below 50, and hopefully in the mid to long term, you should see this ratio coming down to around like 45 to 40%. NIMs came down because the NIMs came down. There was an erosion in the downward. I'll discuss why NIMs came down in the subsequent template. Return on equity and return on average is 12.6 and 1.2. Though it has come down, and hopefully we expect this to go up in the year. On balance sheet, 17%. And what we are delighted is that we have crossed the 300 billion mark. 17% growth. From industry perspective, I think industry size is about 8 trillion. This converts to around like 4%. And we believe that in 2015, either we were able to retain our market share or perhaps grow our market share moderately higher. Loans of 216 billion shows a growth of 19%. The focus is on deposit. We are happy to see that the deposit growth is higher than the loan growth. Deposits grew by 21.6%. We believe the industry growth is around like 15%, so we've done much better than the industry. And finally, coming to the business capacity ratio, or perhaps the ability and the agility to do further business. We see the loan to deposit rate ratio coming down 116 from 119. But this is a ratio which was like more than 150 a few years ago, given that we are relatively new, bank, started as a development bank, and we compare with the industry, we still agree that we are on the higher side, but this is a ratio in the medium to long term to below 100. And capital adequacy ratio and the liquidity ratio remains strong. The capital adequacy ratio of 15.3 already has come down. We will agree that is a strong ratio. Okay, let me take you to the income statement. As discussed, what we see is 3.5 billion, a reduction of 14%. Net interest margins came down by 1%, and that's because the interest income grew by 1%, but the interest expenses you see has grown by 3%. And why the interest expenses grew by 3% is because we also changed the funding strategy during 2015. You see in the balance sheet, around 2014 and before, we were largely concentrating on short-term borrowing. What we did in 2015, we went into a debenture, more sustainable and more stable source of funding, but that really reduced the margin. But perhaps from a risk perspective, from a liquidity perspective, we done the right thing. Operating income grew by 3%. Operating income includes the net interest income plus all the other income. Grew only by 3% because net interest income came down by 1%, but for fee and other income went by about 10%. Impairment is up by 4%. And that again, if you break it into individual and collective impairments, the bulk of the increase came from individual impairments. The bank thought there were few accounts based on cash flow objective evidence. It was prudent to take to the P&L based on the internal model. From collective impairment perspective, it in fact came down. There was a release. Operating expenses went up by 16%. As I explained earlier, you set off the one-off, then realistically should be around 12%. Operating profit shows a decline of 12%, but again, if you really set off the 700 million from the 750 to be precise, 753 to be precise, and then the 173 million of the operating loss, there's almost 1 billion. If you set off the 1 billion, you really see a growth of around like 5 to 6%. Tax came down by 255. That includes the NBT, the VAT, and the corporate tax. Lower tax because low profit, but the effective tax rate marginally increases around 37%. So in this is a reconciliation between the profits we made last year to the profits we made this year. So what you see in summary is our NII came down by 106 million. That's because of the increase in the margin. But our other income went up by 431 million. Income expenses increased by 217 million, mainly because of increase in the individual specific income. Operating expenses went up by 900 million. That includes the 173 million of one-off expenses. But we also opened 10 branches during last year, and the tax deduction of 255 compared to last year. So we generated 3.5 billion to our shareholders in Okay, let me go a little detail into the breakup of our revenue. What we see is our gross revenue increased by 3%. Gross revenue includes the NII and the fee and the other income. We in fact expected it to be much higher, but 3% is a moderate growth. Where it came down was because the NII there was a reduction of 1%, but the fee income grew by 10%. Net interest income grew by 1%, and the net fee and commission grew by 23%. And the growth actually came from retail and SME. And this again tallies with what CEO said earlier. Our strategy and our commitment to the retail and SME sector is also bringing us increased revenue in those particular sectors. So you see the retail and SME sector. And also, happy to tell you that our capital market cluster, which includes the wealth management and investment banking, also contributed higher during 2015. For the other income, there is a decline of 6%, and that decline is mainly because of the one-off alien revenue. In 2014, we were able to make money within the and in an environment where interest rates come down, you can make money through the bonds, but we didn't see those gains. On the exchange, which includes also trading, the revenue increased by from 1.2 to 0.3. Let me take you to the expenses, interest, as it's clear. One of the main reasons was because we changed our funding strategy. We didn't want to rely on short-term borrowing. In 2015, we raised money around like 9.4%. You will recall that the venture was oversubscribed in a few hours. And it was a 5-year debenture, and today if you see that thing is interesting enough. I think we've done the right thing in terms of funding, and that should really improve the margins in coming years. Impairment expenses went up by 41%, again, mainly because of specific individual about 6 to 7 customers. Operating expenses up by 16%. If you set off the one-off, the real growth is 12.5%, and that includes the support for 10 branches, recruitment of 200 employees to support future growth, the normal salary increase for the staff. So here to break up, what you see is the main increase in the other or the miscellaneous expenses from 2.3 to 2.7, which includes the 173 million one-off. But in terms of cost-to-income ratio, we are 51%. Certainly, we are not happy. We should definitely see this below 50 in the short or the coming month. As you explained, the year-end target is 45, and our long-term strategy is to get at 40. The industry is like around like 70, something that we want to be there. But this is an area we want to improve. Let me take you to the balance sheet. What excited us is that psychological figure we crossed the 300 billion mark, 315 to be precise. I think the psychological figure is 400. have data. On the liability side, almost like 58% is supported through deposits. And I explained earlier, you see, in terms of funding, the debt, securities, and borrowings in 2015, you see, it was around like 22%, but in the prior year, it was 26%. So our reliance on short-term, overnight borrowings have come down, which means our liquidity position is improving, and we are supporting our municipal partners. Loans and advances. In the last 5 years, we see a compound. And one of the growth, this is what you said, there was in the retail SME sector grew at 54%. So here you see that number. So from this 19%, one of the growth came from retail and SME. Yes, corporate and project finance sectors also, but retail sector, the SME sector grew at a much pace, which is driven intentional strategy. So in December 2014, the retail was around like 36%, and now it's around like 39%, and likely to improve slowly and steadily. Well, I want to elaborate the retail growth by showing some specific products. We have a product called DML, I guess the whole country knows. DML is basically loans, private and public sector employees. The loan amount ranges from 1 million to around like 4.5 million. It's largely unsecured, and we probably believe that we are the market leader in this country in terms of unsecured exposure to the country. And what we saw was in 2015, we booked new loans of around 10.5 billion. 10.5 billion. Our book size is around like 20 billion plus. And the amazing factor here is already the NPL here is around like 1%. The NPL here is around housing will be around like 18 billion. We grew the book by 48%. And credit cards, a whopping 102% increase in yes, from a very small from around like 450 million to give up for your wife also. And I must tell you, this product few years back of whole NDP management really didn't want to continue this product. And we are accounts. And that is very possible because we have customer base of around 500,000 big challenge. You should see that business also in 2015 saw income contribution from credit card over 70 million was the bottom line. Asset quality in terms of customer lending, our balance sheet, over 60% is from customer lending. And what you see here is our NPL has come down from 2.7 to 2.4. So that's good. But even we are more delighted to see the industry NPL also coming down. So that's also a good sign for the banking industry. NDB as well as the industry has done well here. In terms of impairment allowance or the credit cost, which basically the impairment cost divided by the gross loans, it shows 2.5%, whereas the industry is 3%. Now you might wonder why industry is at a higher rate and we are at a low rate. And what you see is that there is a difference of 50 basis points. But again, the impairment, which includes the specific and relative impairment, is correlated to the quality of your credit portfolio. The credit portfolio, in terms of the industry, the gross NPLs are around like 3.2 and NDB is 2.4. So there is a difference of 80 basis points. So we are 80 basis points better than the industry in terms of our credit portfolio, the generic assumption. But in terms of the allowance, it's only 50. So that means either we are more prudent or there is more room. Coming to the portfolio, what you see is our portfolio is very well diversified. And around 22% is to the retail sector, but again, the retail sector comes from various other sectors. No single sector concentration. Construction is around like 90%. Why I say construction is because every analyst, investor I meet, they ask, do you have an exposure to the construction sector? Yes, we do have. Our exposure is 9%. The banking exposure is around like 16%. But I must tell you, the NPL from the construction sector is 0.3%. Just 30 basis points. It's amazing. Amazingly good. Coming towards the NPL ratios, again, no large concentration in any specific segment. The larger levels are at textile and garments, rubber and wood, but I can confirm that these are well and adequately provided. Let me take you to the customer deposit. Over the last 5 years, we have grown at around 25%, and 2015 we grew by 21%. Whereas the industry grew only by around 15%. So we have done much well than the industry in terms of volume and market share. So the deposit base really increased by 23 billion. But what matters to us is not only the amount, what matters is also the quality. And out of this 33 billion, 10 billion itself came from CASA, current and savings accounts. And that's what CEO explained earlier. The focus we have on CASA and some of the new branches we have opened recently is doing well. And you should see that ratio improving even further in due course. In terms of liquidity, we maintain very strong liquidity. Our liquidity coverage ratio, which is the Basel guideline, where you take high quality liquid assets you relate it to the net cash flows over the next 1 month. And I think the central bank wants you to have 100 over a period of time. But internally, we have said that we will always have more than 160, and today we are at 212. So what it shows is that NDB's liquidity profile, the position is very strong. If you compare with the Basel III, the regulators' guideline. Capital adequacy. Our overall capital adequacy ratio is 15.8. Yes, it has come down because of the growth in business. Year one is around like 11%. Leverage has increased from 9.6 to 11. Why it has come down? You'll agree that 15% capital adequacy gives enough room and is adequate for banks to do even further business. We have to see the leverage going up. When the leverage goes up, your ROE will improve. But unfortunately, we didn't see that in 2015 because there was a squeeze in the margin. But going forward, if the increase in leverage, please expect, and we do expect our ROE. Well, for the investors finally, what matters? Dividend. We continue to pay. Probably we are the best dividend paying company in the industry. We just declared a dividend of 7, and for 2015, again we maintained a dividend of 11. And this is despite the super gain tax of 833, which we had to pay. Despite that tax. And despite a dip in the profit. And we are able to maintain a consistent level of dividend because we believe and we have a strong liquidity. Plus, we have a strong balance sheet supported by adequate capital, and we believe in our business model to generate coming and years to come. Investors price to book value of 1.13 for an NDB share is something to think about. Those who didn't have the opportunity, go for it. 1.13. Well, in a summary, profitability, NDB generated 3.5 billion of profits to the shareholders. Although it shows a dip of 14% in terms of absolute value, in terms of quality, if you really analyze, if you really strip off the one-off, you see a growth. Risk quality, NDB Group, NDB Bank continues to maintain a very strong risk profile. You've seen that from the NPL ratios and other credit factors. Capital and liquidity, group's capital ratio is around like 50. Liquidity remains very strong. And rich, in terms of which we opened 10 new branches last year. We have already opened 5 by now. And the focus is digital. I think when Darshan comes here, he's going to shake the market. We'll explain that further. And finally, the outlook and the strategy. The outlook is growth, certainly growth. And from growth, we are going to invest into further growth. And certainly, to deliver to our shareholders the promise result through a well-executed, focused, and disciplined strategy. Thank you very much, and that brings the end of my presentation. If there are any questions.
Thank you, Alvin. President, show is yours. We are more than happy to take any questions and try to clarify the areas you wish to ask. Well, perhaps while you are digesting what was told and perhaps wondering, can I then invite Darshana to very briefly give a glimpse of what we have just launched 2 days ago. Darshana.
Download the NTV mobile banking app and conduct your banking activities with benefit. NTV Bank, our commitment to your success.
Thank you, Oswald and CEO. Just to brief introduction, as Osman said, we have invested heavily in digital journey, and this is the first part of that journey where we are rolling out mobile banking. And as I will show you a few elements in this, where gives you functionalities that there is nothing else in the industry that gives that. So I'll go through some of those functionalities, as well as I will tell you it is configured in a way that it's so easy for someone, customers of course, to onboard themselves. They don't have to go fill forms, they don't have to go, they just download the app, it's available on App Store, Windows, Android, all that. And once you download the app, your existing debit card or internet recommended. So in the first mobile banking facility given by anywhere, where a customer can get onboarded without going to a branch, without having to go through the hassle of getting your own user ID and your password. You use your own user ID through this and you create your own user ID. And as Anjana here, we will show you how to onboard yourself. You go to register now and you can use registering your internet banking, debit card, using credit card, and we have a passbook account activity as well. That is for customers who don't have any of those. They can go to a branch and then they can get themselves onboarded within 5 minutes. Once you do that, go back under a few other things on this app is a few things. A branch locator connected to Google Maps. We are the first bank to connect all our branches and ATMs onto Google Maps, so that when you go there and you go to Google branch locator on Google Maps, you can find out where our branches are. It shows you from where you are, the closest NDB branch. One other thing on this is before you log in, if you check the phone, right, it gives you the latest offers for the day on our credit cards. Once now, when we onboard ourselves, then I'll go to and onboard us. Onboard, login. Okay, so when you onboard yourself, this is one of my colleagues. Everybody is consent to display because I want to show you real data. Right, this is actual live account. Now, if you shake the phone, it shows all your balances of your current and savings accounts while you're logged in. Once you're out, so that's one feature. That's a feature that we advertise. Other features on this is I want to show you a thing called pay to mobile. What pay to mobile means is if an NDB customer wants to send money to another NDB customer, I don't need to know that beneficiary's account number. I just use that beneficiary's phone number from my telephone number list and I transfer money to that person. The account is so money goes straight to his primary account. No other bank is transfer money, so it takes away the problem of knowing somebody's account number. You want to give prepaid, postpaid, either way through your mobile bank. You have to register your phone, but you can do that. You can select the number of telephone number list, and you can go select it and make the payment. All. Another feature of this, you can do any other bank credit card. See, we all have credit cards with other banks that we don't have accounts with those banks. So how do we pay them? We go, we write a check, we stay in a queue, we go to bank, whatever, or we send someone and we make the payment. But through this app, even if you have other bank credit cards, you can make payment to those cards through this mobile banking. And that feature is some novelty. And I think for me, the best feature of mobile banking here is the ability to switch off my credit and debit cards. What this means is, if you go to this option and switch your credit card off, nobody can steal the card from anywhere, even if they know the number or your PIN number. Even if they find your debit card and your PIN number, you cannot withdraw money because through your mobile phone, you have switched it off. So this is a really very, very attractive option that we are given. And one more thing, through this you can activate your credit cards or deactivate your cards. So that ability is also there. You don't need to call the branch, you don't need to call, now most of us get our credit cards at renewal, then you need to call the call center and activate and go through all the hassle. You don't have to do that, you just go through your mobile banking app and activate it. And there are a few more cosmetic features here which I just want to show you. If you go back to the picture. You can see, you can assign pictures from your picture list to various accounts. So if you have a joint account with your wife, you can put your wife's picture just to remind you that that's the account you don't have to worry about, is this that account? Or if you have a minor savings account, kids, you can put that number. And the other aspect of this is the whole transaction of the third parties are done through soft tokens. What that means is a one-time password is pushed from the center to your registered phone number, which you need to use to effect the transaction. That means you don't have to carry tokens, you don't have to remember another PIN. I mean, people who use internet banking and other mobile apps have this issue. When they have to make payment to third parties, they need to remember the first password to getting and maybe another password to do the transaction. But in this instance, a soft token is pushed to your registered phone. You use that number, it's a one-time password, so it changes. Anybody getting to know that password cannot still effectively do the transaction. So those are the key things in this mobile banking which nobody else offers in the country. Apart from that, everything else that everyone else offers is given in this, and a little bit more. You can get credit card statements, you can get credit card online balance. I don't think nobody gives online balances on credit card or mobile banking, so but we have managed to integrate that. As well as you can make utility bill payments through your credit card through mobile banking. So all that is enabled. And this again, as Osman informed you all, is part of our digital revamping strategy aimed at, again, reducing cost, increasing CASA, and pushing the retail proposition further. Thank you very much.
Thank you, Darshana and Anjana. I think that's a glimpse of the commitment we gave you towards last year. It's taken about almost 15 months to develop our journey. Now the excitement is we launched it on Valentine's Day on Monday. We had 550 new onboarding conversions. So I think the journey, I think for Anutaya, COO, is to convert 100,000. I think that's the excitement for us. And then we are relentlessly committed to focus on the conversion first internally within our existing customer base, and then to also start to acquire. So with that little things, resuming to any questions, if there are any questions you would like to take. Yes, sir. Joan, Mike, please.
Thank you very much for the presentation. And congrats on the new implementation as well. With regard to your tax savings, you mentioned that these were tax saving exempt income from these some investments. Just curious on what is the average yield on these.
I think the overall effective taxation, which came down to two attributes. One is, of course, the exempt income. The other one was also with the increased availability of specific provisions in terms of claimbacks to demonstrate. Do you want to touch on the
If you see from the overall tax rate, what we see is for year 2015, we take VAT and corporate tax. It's 37%. But you see from 2014, there's really a marginal increase. At the year end, there was much more releases because you look at the overall portfolio.
there were
So, yeah, tax saving generated just curious on the yield, effective yield on
strategy, perhaps the machine. I think what I'm most effective yield of those investments.
just about
Wow.
one more question. Uh, you retail and project finance groups significantly, but your corporate segmentation still stood at around 58% of the total book.
No, I think the overall corporate is opportunity